All right, so now we're going to do a little special look at gold right in here. Normally we show you the weekly patterns in gold, but we're going to put up a gold chart right now that shows you our cycle analysis in gold. Of course, you can learn cycle analysis by taking our cycle analysis workshop, and I'll tell you about our special in that just in a moment. So what we're looking at here are cyclical harmonic families. This is the minor cycle right in here. Now, this is a cycle bracket for those of you that are new. This is not the cycle energetic rhythm. This is not the actual cycle. It just shows you the ideal average length right in here. And when all of them come down together, and that right there is the silver pattern, as that cycle comes down together, when they're all doing that, you get the biggest risk on the downside. I want you to note that that's where we are right now. Now, let's just look at a long way out here, and you can see that each of those cycle periods brought declines in the gold market. We believed that gold was getting ready to have a very sizable upside movement, but this cycle right in here gave you a breakdown, whereas it came down and extended down to a later low. That's negative. We were concerned about that. It needs to hold above this over this next week and a half or 2 weeks in order to hold together so that it can have a big up move here and maybe a launch to get above that 1970-72 area right over here. That would be through the weekly resistance and the recovery level. So that's what it need to do. We believed, and Arvi put out a negative trade idea. You'll have to become a level 3 member to see those. And this was, you can see this area of a sell zone right in here and how it's rejecting that. And it's likely to be under pressure right over here, is like right over here. We're at the end of this cycle. So that's what we're looking at. We're looking for short-term downside action where we'd like to see it hold above this low around 1800, certainly above this low at 1767, and then get ready for the move here on the upside. So important period we're coming in here, which is a very short-term negative period. So this essentially says that look for impulses on the downside. If you're just watching this clip and not watching the whole show, please go back and watch our tools for text. But what I want to do is go back to that multiple time frame chart where I showed the ES right here, and I'm going to put up /GC so that you can see in here a very similar thing to what we talked about in this overnight pattern where the market fell that you can see right in here. Again, very, very valuable information, as it was right here that the momentum went negative. And again, on the longer term, this is a 30-minute chart. This is your directional decision. And then on the shorter term chart, this is an 8-minute chart. This is where you have your entries and exits. And you can see in here where it gave you the negative momentum signal was at 1866. And there were several large impulses on the downside right in here where it fell from that area of 1866 all the way down here to 1836. So there was a $30 decline and certainly great opportunities for a trade. Again, what we're looking at is the slim ribbon right here, which gives you the momentum, and the same thing here on the 8-bar moving average, 8-minute in this case, and down over here, the signals that are confirming to you that it's likely there's going to be downside movement. And then in here, your signals for entry goes neutral, entry goes neutral. It actually got positive here for a couple of minutes, and then it went negative again. And you could see once it did that, and the additional sells right here and right here, all fantastic information. So I wanted to show you that on gold as we look at the intraday chart and multiple time frame analysis, momentum analysis, and how to really catch the bigger trade. So I showed you that in the ES, and now I'm showing you that in gold. Again, depending on the time frame that on your holding time frames, you might extend this. You could use, a 1 hour and a 10-minute, or you could use a 15-minute and a 3-minute. Generally, I like to have them 4 or 5 times apart. So if it's an 8-minute, we'll go to a 30 minute or a 45 minute, depending on what you're comfortable with. So that's a look at gold, which we're looking for some risk here over the next couple of weeks to the downside, and hopefully if that holds together, then we'll be bringing you back the intermediate projections on the upside. If it breaks under that level at 1767, it will be a nightmare for the longer term patterns and telling us that there's a lot of trouble out there. We don't want that to happen. We think it's more likely it'll hold up here this next week and a half or 2 weeks and then begin to move to the upside.